Ladies and gentlemen, welcome to the Trade Credit Insurance Week organized by ICISA. My name is Richard Wolf. I'm the Executive Director of ICISA. And this event's primary objective is to increase awareness and to showcase the trade credit insurance industry and all that it can do for this world. We are always seen as small, but we're pretty important to the world economy and the economies we live in. Now, in this week, we have some strategic topics. We've got some more focused technical topics and some geographical, like this one, unlocking business opportunities with trade credit insurance in Sub-Saharan Africa. The moderator to this panel is Peter Mulroy, and Peter is the Secretary General of FCI, the world's largest association and network of factoring and receivables finance companies, with its headquarters in Amsterdam. Peter was previously Managing Director and International Regional Manager of CIT Commercial Services, having served on the Management Committee supporting the global growth strategy of the company. Peter is a past chairman of FCI and has served on the FCI Executive Committee for over a decade. He has an MBA from Thunderbird School of Global Management in Arizona. As Secretary General, Peter assists banks, regulators, and governments in educating the role and introducing the concept of factoring. He addresses audiences around the world on the subject of receivables finance and international trade, and is generally regarded as a global ambassador for the factoring industry. Now, with that background, I think Peter is the perfect person to moderate this panel. And Peter, the stage is yours.
Thank you very much, Richard, and thank you for organizing this great event. Delighted to be here and to participate in this kind of special TCI week, and specifically on this topic about unlocking business opportunities with trade credit insurance in Sub-Saharan Africa. So thank you. Ladies and gentlemen, I think we're going to just get started, and I'll just give you a very, of course, Richard gave a brief introduction of myself. Maybe just say a few words about FCI. We represent the global interests of the factoring, receivables finance, and supply chain finance industry. We have about 400 members, and these members account for about 60+% of the global factoring activity, which equates to $4 trillion today. And by the way, half of that volume is backed by credit insurance in some form or fashion, credit protection. So credit insurance plays a vital role for the health and growth of the factoring industry. And it's a symbiotic relationship. So what happens to credit insurance happens in a sense to factoring, and I would say vice versa. The other thing I would just want to mention is that FCI started a couple of, I think 5-6 years ago, a working group that comprises the heads of the trade credit insurance bodies, some of the development banks, including the Afro-Exim Bank, and also, of course, ICISA and the Berne Union. And we meet every year and discuss and understand, let's say, the challenges and opportunities that we're facing as an industry. We have a great group here of panelists, and these people are industry practitioners and specialists in the areas of credit insurance, factoring, and supply chain finance. And of course, we're joined as well by the Afro-Exim Bank. And I'm going to start with Enga as an introduction. Enga, please go ahead.
Thank you, Peter, and thank you, fellow panelists and distinguished guests that have joined. Enga Kameni is my name. I'm a senior manager with the legal department of the African Export-Import Bank, which is Africa's premier trade finance bank. And I'm also the vice chairman of the factoring working group within the bank, which is a cross-functional group made up of colleagues from credit, from business, from banking operations. So we develop and implement the bank's factoring strategy. And it's a pleasure to be here to share our experiences and some of our perspectives in terms of credit insurance on the continent and the way forward. Thank you.
Thank you, Inga. Michael, maybe you can introduce yourself, please.
Hi, everybody. Michael von Smidis here. I'm a founding partner at T3I Partner Network LLP, and I am deputy chair of the World Trade Board. I did a 25-year career at Standard Chartered Bank, where I ran the trade finance business globally for a period of time, and also spent some time in a technology company. Really great
Thank you,
speaker.
Michael. Thank you, Michael. Menzo, please.
Thank you, Peter. Good afternoon, everybody. Name's Menzo. I work for Lombard. Lombard is a business based in South Africa, Johannesburg. I run the trade credit insurance side of Lombard, and I have done so since 2017. And really, Lombard is a wider business, part of the Insurety group. We have a surety business in Northern Europe, Scandinavia, and we have a surety business in Australia. Really happy to talk to you guys today about this topic.
Thank you. Thank you so much. And Wally.
Thank you, Peter. My name is Wally Sa. I'm from COFAS. I'm currently the bank and financial institution manager for COFAS West in Central Africa. I'm based in Dakar, Senegal. I manage a partnership with banks in the West and Central Africa countries for factoring and TCI solutions and services. I started working for COFAS since 2008, and I'm grateful to be here. Thank you for ICISA and for Richard to the invitation. Thank you.
Thank you, Wally. Thank you very much. Thank you, gentlemen. It's a pleasure to be here with you guys. So I have a list of questions and would like you guys to just obviously respond. And the first question is really just kind of getting your thoughts on the current market and the role that trade credit insurance can play in helping companies in developing companies like in Africa, and especially SMEs. And maybe I can start with Menzo.
Peter, with pleasure. As mentioned, we're based out of Johannesburg, South Africa. We can take risk all over the world, but the majority of our risk taken on TCI exposures taken in South Africa and Sub-Saharan Africa. And we're in the market, and we know the market. We think TCI could play a much larger role than it does in the African market. And really the biggest reason for that is the cost of funding in these regions is high. I mean, you've got average bank lending rates running somewhere between 12 and 20%. And, if you're raising working capital funding or getting funding from your suppliers on credit, it's a much cheaper option. We don't see, particularly up in Africa, that TCI is widely utilized really for two reasons. One, because of asymmetries of information. Not a lot of data is available, or less data, shall I say, than in developed markets, and particularly on the financial side. So, banking data is hard to come by, and financial statement data, particularly for smaller companies, SMEs, is harder to come by. The other reason why we don't see a proliferation of TCI in the African market is really the perceived risk, in our opinion, is often higher than the actual risk. And what I mean by that is a lot of providers of trade credit insurance look to the African market as high risk. They see it as delivering higher claims ratios than other markets, developed markets, shall we say. But in our experience, we can underwrite risks really well if we go into region, understand the risks. Often companies are multi-generationally owned, operating with really low debt because of the high interest rates, and the default rates are certainly, in our opinion, lower than what's perceived out there.
Okay, thank you so much, Menzo. Great start to the panel. Wally, your thoughts regarding the current market and how TCI can play in helping companies in your region.
Thank you. In our region, we have the opportunity to offer factoring service and in TCI contract for banks. It's a challenging and an interesting experience. and we continue to sign partnership with banks which have appetite to launch factoring. The availability of the credit insurance enables banks to develop non-recourse factoring in our area, and also invoice discounting without recourse. For example, a policyholder can guarantee its policy to the bank to obtain to get financing without recourse.
Great, thank you. What about you, Michael? What do you see? You're muted. Yeah.
Yeah. So I think what we see is that, what I've seen in the past is that trade credit insurance plays a vital role in the availability of financing. You know, when we used to look at financing from a bank perspective, it was really about being able to increase the appetite on a name that you're willing to lend to in the first place. But with trade credit insurance, we know that the data shows that a company with trade credit insurance essentially has lower default rates than one without, because they're essentially protecting themselves from shocks. Africa was really difficult from our perspective in terms of seeing the availability of trade credit insurance relative to other regions. So there really is a huge opportunity here to increase the availability of trade financing to the region.
And Michael, maybe you can share with us a little bit about the FIT program. You know, this project that you're involved with, or do you want to wait until a little later? It's up to you.
No, I'm happy to talk about it now if it makes sense.
I think so. Yeah, please.
You know, there's been lots of talk about the Asian Development Bank's study around the $2.5 billion trade finance gap, which was up from about $1.7 billion a couple of years ago. And most of the commentary in the market is about explaining the gap or justifying the size of the market to an equity investor that's going to invest in your technology platform that makes you, you know, shows how big your opportunity is. But there's not really enough discussion about the specific actions that are needed in order to reduce the scale of the gap. And we took this on at the World Trade Board, and we created a roadmap. And people ask, you know, why did you do a roadmap? It's just another paper, you know, and these are sort of natural questions. But we decided to do a roadmap because we've seen that doing a roadmap has been successful in the past. If we're setting clear plan with accountabilities, this works, right? And we did this with the ICC Digital Trade Roadmap in 2017, and we had a number of pillars and actions, including among them, you'll be aware, Peter, about the model law for electronic transferable records, which is critical to the ability to transfer digital records from one counterparty to the other. And we're seeing a lot of that actually being implemented today. We had the Electronic Trade Documents Act in the UK being implemented on the 20th of September, came into force on the 20th of September, for example, which is really changing the game for digital trade in a number of locations, including, you know, the Commonwealth picking this up recently as well. So, you know, being clear around accountabilities is really, really important. So we wanted to do this for financial inclusion and trade. You know, we started that digital trade roadmap in 2017. It's taken years and years to get there. We wanted to get going with a roadmap for financial inclusion because it does take time. And we spent a year discussing with a number of financial inclusion, with a number of financial institutions, with sort of 100 experts across, you know, both industries, development banks, technology companies, asset managers, financial institutions, and really to whittle down a list of 40 potential actions down to sort of 5 key areas that we believe that if we focus on it, will move the dial in this space. And for each action, we've identified accountable parties. And we're not focusing on reinventing anything, but rather working with groups that have initiatives in the space to augment them or accelerate them. So, you know, in trade finance and factoring or invoice financing, it's all about enabling financial transactions using trade as collateral and not other forms of physical security or collateral. And what we've seen in MSME financing is that if you can actually take the actual trade as security, you accelerate it. And there were 5 key areas that we kind of focused on, and this excerpt from the roadmap here shows the 5 key areas, which is digital infrastructure, and this is really to try and encourage mandatory e-invoicing. You know, it was mentioned that there's an asymmetry of information. Well, with e-invoicing and digital identities, you start to reduce that symmetry of information. We talked about data infrastructure to allow for improved credit decisioning, a legal and regulatory infrastructure, which really is about driving adoption and there's the unified law model law that's of factoring that's being launched, and it's really about facilitating the adoption of this in regulatory regimes to make it simpler and easier. There's obviously technical assistance, and finally, we can't expect the world to go digital very, very quickly, and Africa has in some cases a long way to go. Although, tell that to M-Pesa and the guys in Kenya, but there are opportunities to accelerate this. But in the meantime, we thought the group came up with an action around enabling financing using some sort of blended finance instrument, such as an Africa fund, to accelerate the first loss capacity, so that we could get better data analytics and better reference points. So I'll kind of stop there. I can come back to it at a later point, but I think that's all for now.
Yeah, thanks, Michael. And I'll ask you a few more questions about this FIT program, because it's very, very unique, and I think it's a great model and blueprint to really support the development for financing for SMEs, in a region like Africa. And turning to Africa specialist, Mr. Enga Kamini, please. Enga, what is your thoughts?
Yeah. And as the previous speakers have made allusion to, I think credit insurance is key in terms of developing factoring and receivables financing. Mr. Walisa earlier spoke about the challenges that we face. So as a bank promoting trade finance on the continent, we've taken a deliberate policy to promote credit insurance and to try to create synergies between insurance companies and factoring companies and banks, so that we can start thinking about how best we can overcome some of the challenges inherent in the industry. Because we've realized that compared to other regions, credit insurance is still at its nascent stages on the continent, with the exclusion of a host of countries such as South Africa, maybe the northern part of Africa. But at the level of Afreximbank, looking about the symbiotic link between credit insurance and support of factoring, we are in the process of developing the payment repository, and the intention is to have information that credit insurance and others could readily use in order to assess buyers and other payment risk. We believe that this is really key, because at the moment there are, but it is not as established and enshrined in most parts of the continent. In fact, absence of information is one of the key challenges that insurance companies do posit for their non-committal or their non-use or non-coverage of certain factoring companies. And we've gone even beyond the payment repository. We have an established factoring strategy, which I'll talk about subsequently. All of these efforts that we see go a long way, that will go a long way to promote factoring on the continent, and they include legal, support for legal and regulatory frameworks and developments on the continent, provision on finance and guarantees to factoring companies and factoring subsidiaries of banks, and also entering into strategic partnership. I'm talking about strategic partnership in the insurance space. We are trying to work with COFAS, FANAF, which is the Federation of African National Insurance Company. And as Peter, you mentioned earlier, you talked about meetings with the Ben Union, which ICISA and other companies are part of. So we also do our best to attend these meetings to see what are some of the key issues, as well as to share experiences. And all of this is to ensure that we put credit insurance, we mainstream credit insurance in the factoring space and as well as the receivables finance space. Thank you.
Thank you, Enga. Actually, Enga, let me ask you a targeted question just to you. How has Afreximbank made a difference in the support of the growth of factoring coupled with credit insurance in Africa? You kind of started talking about this, but can you go a little bit deeper into these initiatives that you mentioned, and including, of course, the payment repository? Maybe give a little bit more detail.
Absolutely, Peter. We've been a key player in the factoring space for a number of years now. I would say more than 2 decades. And we believe we are a trade finance bank, but we believe that in order to push and promote factoring on the continent, it's not a one-size-fits-all solution. So it's we looked at the challenges from a holistic point of view, and it's because of that best eye view of factoring on the continent that we developed a specific strategy, a factoring strategy in 2016. And this strategy has key pillars, which I'll speak about. The first being financial intervention. So the financial intervention is to provide finance and guarantees to factoring companies and bank and subsidiaries of banks that do factoring on the continent, because they need this capital to do the business, right? Without it, they will not be able to do this, right? So it's one of the key pillars of our factoring strategy, and I can say that for more than 6-7 years now, we've approved facilities of over $100 million, and we have beneficiaries all over the continent that have used this facility, which has gone a long way in promoting factoring in different jurisdictions, which hitherto we hadn't seen. Then another key area of intervention is support, legal and regulatory support, because we realized that in some of the countries, a couple of years ago, factoring was not properly articulated from a legal and regulatory perspective. So it became difficult, and we saw instances where factoring was being mixed as part of banking, right? And when you mix factoring with banking, you make the factors and small companies to fall within the realm of banking supervision. And yeah, all sorts of issues such as prudential ratios and capital issues and this and that become applicable to these factoring companies. So we've engaged with legislators in many countries. We realized the challenges, and we developed a model law, Afro-Eximbank model of factoring, which today has been enacted and adopted by many African countries. And we've seen that it has gone a long way in terms of streamlining the processes and making regulators and lawmakers understand what is factoring and how best it could be regulated, especially what constitute assignments. And as a key testimony to this, we realized that in Egypt, when they use parts of the Afro-Eximbank factoring model law in developing their law, the number of factoring companies increased tremendously from in the north of, I think, 8 or 9 to about 30 something today. So we've seen the impact of this law in different African countries. And we can say that from the period which we launched the factoring model law to now, factoring companies have increased more than, I would say, to in the north of about 100 and something. And about 40 of those are currently FCI members, and they have seen how important having such a regulatory framework is in supporting certainty and clarity in terms of factoring transaction. Then we also do awareness, capacity building events all over the continent, and we partner with institutions such as FCI and other stakeholders, which over the years we've built key strategic partnerships, which is part of the factoring strategy, because alone as Afro-Eximbank, it will be difficult to carry out all the tasks that we envisage in supporting factoring on the continent. So we have to partner, and we have partnered very successfully and to great effect with institutions such as FCI, Nigerian Export-Import Bank, etc., etc. And we've realized that this partnership has gone a long way to ensure that we carry out a series of capacity building initiatives over different parts of the continent. And last but not the least, as I mentioned earlier, we are also strong in supporting services. And one of the key service areas that we've seen lacune on the continent is the absence of credit insurance. And as a bank, we've realized that one of the key challenges, and having spoken to credit insurance providers and stakeholders and market players and participants, we realized that absence of credit information, be it on the buyer side, be it on the seller side, is one of the often cited reasons why credit insurance hasn't taken the kind of center stage that it has we've seen in different parts of the continent. So I think these are in summary, these are some of the key strategic initiatives of the bank for support of factoring and credit insurance.
Very well said, Enga. Thank you so much. Menso and Wally, maybe I can address this next question to the both of you. What do you view as the critical success factors in terms of developing and increasing the role credit insurance plays in the continent? And also, what about the role of digitalization technology that can play to help evolve the provision of factoring and credit insurance in the continent? And either one can go first. Wally, why don't you go first, and then we'll turn to Menso.
For the question 2.
Yeah, just in terms of like what you see as critical success factors. You know, what makes the difference to be able to develop credit insurance, you know, in the continent? What are the success factors? What really helps build it, the building block, so to speak?
Okay. We can say that the popularization of the factoring companies would make possible to better promote factoring. We have, in fact, the processing of file would be faster, and in addition, we would allow SMEs to access financing more easily. Indeed, we as banks, as factor, the selection is tower. Everyone has their own target, and I even I published an article in the slide line of our FCI seminar in Dakar in June. Yeah, and we have also a good partnership in our area. We have a real business continuity plan, and in factoring, with credit insurance, the amount of invoice purchase evolved in the same direction as the insured amount. For example, if the insured amount grow, purchase amount grow. We have a partner in West Africa for whom the amount financed have multiplied by 20 or 25 in 10 years of activity. For us, it is very, very interesting.
Yeah, Wally, I mean, I know COFAS has been at the origins of supporting the development of factoring in West Africa, especially with your partnership with Dancerous and the banks, providing a complete platform, a technology platform, a credit insurance platform, so these banks can basically outsource the product. Because of course, the biggest challenge is education, is knowledge, is developing, let's say, a credit policy and
training,
comfort.
Training also, and as you are saying, we have taken a license from a British company, Dancerous. You say his name, and this tool is used by COFAS and by the bank agent to process all factoring operation. The bank has in fact outsourced the management of operation to COFAS. And we do a process interface with bank's core business system and the tool of Dancerous, and the tool system can communicate by a file. This file is sent by email or deposit on a server. Also, subscribers or clients have an access to this tool, and this access allows them to view all operation, invoice assigned, payment, paid invoice, study of their account. So it is very interesting.
Yeah, thank you, Wally. Thank you. Menso, maybe you can give us your views as well in terms of the critical success factors that you see, in terms of your opportunities and growing the business.
Sure, Peter. And Wally, my experience comes more from a credit insurance side, less from a factoring side, and less from dealing with the banks. In terms of critical success factors, there's a few, but the one that stands out, I don't think is unique to Africa, but for us, it's to underwrite in region. We're based in South Africa. We have no offices outside of South Africa, but we take a lot of risk in countries like Zambia and Mozambique. And we do so by going into region, often with our clients, to meet buyers, to meet companies, to understand challenges in country. And those challenges are varied. I mean, Africa is a highly diversified region, and you need to understand things like forex availability, legislation in country, infrastructure and transport, accessibility to certain areas, really well before you start taking risk in those regions. And I think, the critical factor there is to do it in person, in region yourself. And then Peter, maybe to bounce the second part of your question, tech and, how digitalization has helped. Maybe just a fun example. I mean, we were in Mozambique a little while ago, supporting one of our clients selling into an FMCG distributor in country. And, these guys are selling to fairly rural areas where companies don't have a lot of infrastructure, a lot of office infrastructure, and guys are running their businesses off, highly sophisticated OTC, order to cash systems run off cell phones, dropping stock, everything runs off a cell phone, which in turn relates back to funder and factoring can be provided off the back of that. It's fantastic. It's great to see.
Yeah. It seems like, I think, Michael, you were saying like in some cases things are, behind the times, but in some cases things are way ahead of times. And right to your point, the use of technology and marrying that with the cell phone, and it's really kind of created some incredible products and capabilities. Michael, it would be great to kind of expound a little bit about this FIT project, and maybe you could talk specifically about two or three of the areas. One regarding the this fund. Maybe you can kind of give a little bit more detail what your thinking is and what you see the value. And then maybe a question, relating to the other pillar, which is regarding the enhancement and improvement of the legal and regulatory framework, and what Enga had talked about. And then and if you have enough time, just one point regarding e-invoicing, and maybe you can give an example.
Yeah, no problem. And listen, I think Enga, I love what Africa Import Bank is doing, because quite honestly, the payment repository, and I'm going to go in reverse order to what you said, but I think the payment repository is really, really important, because data is really where you start, right? If you're going to build a long-term viable platform to enable both credit insurance and off the back of it financing, the data platform is really, 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 really critical. And we're doing some work around that. But I think, it's always best to talk in terms of data terms, right? I think you talked about the doubling of factoring companies, or even tripling of factoring companies in Egypt as a result of the change in the modern law. And I think what we saw in the market is, if you combine the legal infrastructure with the digital infrastructure, you get a huge impact in terms of availability of financing as a percentage of GDP. So, we always like to quote the FIT project, the example of Chile. And you said in 2012, the factoring volume as a percentage of GDP, i.e. financed invoices, focused on SMEs, was less than 5% of GDP. They made two changes. One was to mandate e-invoicing. And this led to an increase of that factoring volume to about 7.5% of GDP. Remember, GDP is also growing at the same time. And in 2018 and 2019, they simplified the factoring laws. And not only did they simplify the factoring laws, they introduced a few innovations, such as enabling a confirmed payment after a set number of days if there was no challenge to the invoice. And that led to the percentage of GDP increasing to 10% that was financed through invoice financing. And so essentially you had a doubling of the amount of availability of financing as a percentage of GDP to SMEs through these two fundamental changes. And I think that's really, really critical. But as I said earlier, you can't expect that you're going to, changing the laws in each country, talking to regulators, getting a digital infrastructure set up. These things take time, and they take patience, and they take determination. In the short term, you've got to make availability of financing. And I think, again, sort of a similar concept. And obviously, Frexham were part of the group, and a very important part of the group that we had. And really what we focus on is kind of creating an overall fund for Africa, both in terms of first loss for credit insurers, because if you take a first loss tranche out of a credit insurance portfolio, that also allows for credit insurers to be able to be a little bit more positive on the on the risk. Obviously, we expect anyone that would do that would have their own risk assessment and not take a risk that they wouldn't otherwise take on their own balance sheet. But also make it available to financiers and platforms, including factoring companies in the region. And the idea is to sort of start with, and we're working with a couple of counterparties to kind of build this fund out. And we're trying to quantify the actual demand, because also you don't want to go and ask a whole bunch of development banks and blend finance providers to go us with money when you can't actually deliver against it. So there's a bit of work to be done over the next 12 months, but the full intention is over the next 12-month period, we'll have something that we can come to market with and support the industry.
Thank you, Michael. That's great. So I'm going to combine the two questions because for the sake of time, we have about 20 minutes left. So maybe you can provide, each of you, an example of a successful case where, for one, credit insurance and factoring together open opportunities for SMEs, and two, as well, where you've seen the implementation of a legal and regulatory framework develop, and the impact that has on, let's say, the growth of factoring and credit insurance in that market. I remember, just briefly, a long time ago when I think it was one of my first trips to Sub-Saharan Africa, someone said, they were talking about credit insurance, and they were just saying how the companies that, need services, they need liquidity first, and credit insurance follows, because credit insurance is the back end, in a sense, of factoring. But in some countries, of course, the demand for credit insurance is so high, but because liquidity is so scarce, especially for SMEs. So maybe you can just, in terms of, these two kinds of parts relating to success regarding a success case regarding the joining of credit insurance and factoring in Africa, and then also the legal and regulatory question. And Enga, why don't we start with you?
Okay. Thank you, Peter, and thank you, Michael, for the preceding discussions. Peter, I think to us, right, as I mentioned, of course, the bread and butter is financing and provision of guarantee, right? But over and above that, we realize that there are certain key components. It's like a web; each component ties to the other, and we can point out to a number of successes in terms of developing the regulatory and legal framework. And I mentioned Egypt earlier, and where prior to 2018, they had, in the north of about 8-9 factoring companies, and today we have 40 something. So too in countries like Cameroon, Nigeria, Ghana, Senegal, Cote d'Ivoire, Zimbabwe. So we realize that, of course, you can bring the financing, but if the infrastructure, legal infrastructure, isn't there, and we also realize that in certain countries, right, one of the key impediments to our own financing is the absence of credit insurance, because one of our requirements is that, okay, if you are not providing any sort of collateral or security, at least let us have a credit insurance, right, in case it goes wrong, we can call on that credit insurance. So it's difficult to find it. And when we interrogated the market, the view was that, look, we don't even have information about the factors. We don't even have information about this or that. And sometimes in most countries, you realize that the law or the regulation is mostly on maybe third-party insurance, life insurance, etc. Credit insurance in some of these markets are new. So we think that it's a holistic approach. We are blending, development of a regulatory framework, legal framework, and financing. And we believe that it's not only the efforts of Afreximbank or a few partners, it's everyone involved, the regulators, even the insurance company, right, to start seeing how maybe they might open subsidiaries of credit insurance, or also support people to tread into credit insurance. Of course, COFAS is one of the few. It's doing a great job, but I believe that on the continent, we need more than just COFAS and the few which are there. And we think that with a combination of all these efforts, right, we can start seeing receivable financing, factoring, and other industries mushrooming and growing on the back of the development of the credit insurance industry. Thank you.
Thank you, Enga. Same question to you, Munzo.
Peter, I'm a bit shy to answer on the legal and regulatory framework.
How you want to answer, it's fine.
If I can maybe kind of come in with an example of what we've seen where credit insurance generated opportunities, particularly for SMEs, but just in general. I mean, our experience up in Africa, certainly in some industries, and building DIY is one of those industries. Often the markets are cash traded, which is fine in terms of working capital. You're getting cash for your stock. It's actually cash positive, so it's not really a problem. The problem is it's hard to increase footprint because you can only sell to the guys that can pay you on delivery. Where credit insurance comes in is it provides that term of credit to really enable a company, a seller, to increase their footprint, to go into a wider market, typically a market that they wouldn't ordinarily sell to. And we've seen that quite a bit, particularly in the Zambian market, again, in building and in DIY, things like steel and cement and things like that. And obviously TCI enables factoring on the back end if the supplier needs money to enable the working capital cycle.
Great.
So really, I mean, the message is increase in footprint, increase in
Right.
sales to a market you ordinarily wouldn't be able to get to.
Well, you touched on a great point, which is, the concept of open account itself is what you're saying is not, let's say, fully realized. Where 90% of global trade today is on an open account, but that number decreases significantly in certain markets in Africa, and especially when you don't, to Enga's point, don't have the proper laws to do financing of receivables. So it's almost like the one hand goes with the other. And of course, at the end of the day, who does this benefit? It also benefits buyers, that they can now delay payment, and obviously helps them. So it's a win-win for everybody. So this is why it's so important.
Absolutely.
Wally, what about you? Any thoughts relating to a successful case? And I know you mentioned, of course, the project that you did in the UK with the UK company, but anything else you want to add?
Yeah, as I saying, we are working with banks in factoring and credit insurance during 10 years or more. Inspired lack of information, we have good opportunities. The figure are growing each year, and banks in West and Central Africa need to develop factoring with TCI, and COFAS is here to support all banks, to support banks who need to do a partnership with COFAS, and many SMEs, many companies increase its business with factoring solution. The amount of purchase invoice evolve in the same direction as the insured amount. If
Well, let me ask you just a question. Let me ask you a question, because you're right there in the heart of the West African community, providing services, providing credit insurance. How have you seen the launch of these factoring laws in so many countries in West Africa, thanks in great part to the work of the Afro-Exim Bank and their model law on factoring, which has been implemented in a number of countries, in the BCO, 8 Francophone countries, and some other countries, Congo, etc. Are you seeing, as a result of the improvement of these legal frameworks, are you seeing a difference?
We are not a presence in Congo. We have a presence in Senegal, in Ivory Coast, and in Cameroon, also
Right.
Ghana.
And with the exception of Ghana, all of these now have factoring laws. All of them have factoring infrastructure, regulations. So, my hope is that because of it, it's like the one's feeding off the other. I mean, Enga, I know in Nigeria, we've been waiting and waiting and waiting, for this legal infrastructure to take hold. And we know that there are financial institutions waiting to enter the market because of the lack of a proper legal framework. And, maybe just say 2 words, quickly, in your view, about that. Enga.
Yes, Peter. Yeah, Peter. I think this it stems from the problem about clarity and certainty, right? And as I mentioned earlier, when we were developing the model, or we did some kind of a diagnostic analysis, situation analysis of where African countries were, most African countries were in terms of legislative development on the model. And we realized that, different patches of, civil or common law, Sharia law, principle, were applicable, and factoring was like at the back burner. So when we started this process, we brought it to the front runner, and we had to educate regulators and legislators that look, factoring is different from normal banking. Is a product in its own right. It's a service in its own right. This is what has to be done. And many countries have taken up, I've seen it as taking it with greater interest. And in Nigeria, for instance, we've been working with legislators for a couple of years. Unfortunately, we've not been able to, and we know that the market is one of the biggest on the continent. We have people who want to go, but they are not quite sure that, look, we don't want to go into something where, tomorrow the regulators will come and say, look, you are going into uncharted territory, right? But we think that with the support that we are having on the current legislation, and with partners such as FCI and partners in Nigeria, we will get there. And we see a lot of development and potential. Of course, they say normally you do not need to have the laws before you can do factoring. Yeah, you can do it, but we've seen that, and there's evidence that where there is, clarity in the laws, factoring transactions and factoring volumes increase 2 or 3-fold.
Yeah.
So in Nigeria, we've been working for a while, but we see some light at the end of the tunnel.
Yeah. Thank you, Enga. Michael, what about you in terms of success cases? And
so I'm going to sort of success, but not success, right? So I work with a platform that operates in my home country, which is Kenya, right? And I advise them, and they have this really innovative solution where they effectively have a receivable on one side and import invoice on the other side, and they're selling to large buyers. The ability to get capital and third-party capital, they're effectively funding transactions. They help their clients fund transactions, which are SMEs in the geography. The ability to get third-party capital in has been really, really tough. The moment we went out and we got credit insurance, that door opened significantly. Unfortunately, it wasn't African credit insurance. It was credit insurance for outside of Africa. But the reality is that door opens really, really quickly the moment the credit insurance is there, and I think that's why it's so important and so critical to the overall development of the continent.
Thank you, Michael. Listen, guys, last question, and if we have a few minutes, I hope at the end for just maybe 1 or 2 questions from the audience. And by the way, if anybody does have any questions, I meant to say this in the beginning. My apologies. Please, there's a app you can just type in your question, and otherwise we have a few questions at the end that we can also ask the audience. So ask the panelists. So the last question, gentlemen, where do you see the TCI industry in Africa in 10 years' time by 2033? And start with Mensa. Why don't we start with you?
I've got a fairly cynical view. I don't see it very much different to what it is now. To be honest with you, I think that the returns in the African market, particularly from a financial side, aren't really big enough for coordinated investment. And because of that, we're not going to get solutions to the problems that we currently face, which is asymmetry of information and a real understanding of risk profiles in region and how to price those risk profiles. Unless we get some kind of properly coordinated action, and the most I've been seeing in the regions I've been traveling, is the influence of China, with their Belt and Road Initiative. And if that comes right, and that coordinated action across region or something else of a similar nature comes right, and we get to properly understand the region, then I think TCI will proliferate, and we'll see a highly developed market emerge. I just don't see it happening in a rush. Sorry for the cynicism.
No, that's a reality on the ground. Thank you. What about you, Wally? Where do you see the credit insurance industry in 10 years' time?
In 10 years' time, I think that credit insurance is an interesting alternative for business development in our countries. But we have our companies need approval from SEMA. SEMA is a confederation of the state in West and Central Africa, which manage all companies in all insurance companies. You need an approval of SEMA. The company have to create and submit a file to the session of SEMA, and after I think that the credit insurance offer most diversified. We can have most diversified offer from credit insurer, from COFAS or others, because we have we can have a flexible offer. Affordable premium rate. The premium rate is very high. We can have a good coverage, a good credit limit. It's true that the risk is very, very, very important. We have lack of information. Also, we require an expertise, because credit insurance is an industry. We have information department. We have underwriting. We can have debt collection department. Also, all the services is needed by the companies to can make credit insurance. And I think that the state, our state in West and Central Africa, have seen that credit insurance can help to resolve the financing of a problem of SMEs. The problem of financing for SMEs. Global insurance companies have appetite. Now I think that in 10 years we can have a most opportunity, a most interesting offer, a most development of credit insurance.
Thank you, Wally. Thank you so much. Thank you, Wally. Michael, what about you?
Yeah, so I think I'm going to try and answer Sakelish's question in the chat as well at the same time. I mean, my answer is it depends, right? And it depends on a couple of key things. One is really around the data infrastructure. So I'm talking about telecom infrastructure and the availability of cloud, right? So, a lot of what I've seen in the West is that the ability to put your account onto an application, an accounting package that's available online, and then embed the financing and the data extraction from that has been really, really critical in enabling embedded finance throughout this region, right? So that's not there in Africa today. So every time I have a conversation with a factoring company, it's about doing your accounts on an Excel spreadsheet effectively, or on a paper book, right? So I don't think that has moved tremendously. So I think that really is going to be the determinant, is whether there's a significant shift. And with that comes the e-invoicing and the invoice repository information, because getting those right, along with the factoring laws, is going to lead to a tremendous availability of information. And that's what's going to drive the innovation and the availability of trade credit insurance over time. So if that happens, then you're talking 10-fold, 20-fold, 100-fold. If it doesn't happen, I agree with Menso. We're going to be in the same place in 10 years' time having the same conversation.
Yeah, agreed. Thank you, Michael. And Enga, you have the last word.
Oh, thank you. I'm an Afro optimist, so I think there are so many elements or ingredients on the continent that will help support credit insurance, and I see it increasing tremendously in the next few years. And I guess one of the key issues that it has not really developed the way it will have compared to other regions is information asymmetries, right? So how do you bridge that information gap? Because at the moment, you have SMEs that are mushrooming. You have the African Continental Free Trade Area, and people are taking advantages of this. So we see some of the enablers, right? But how do you ensure that these enablers are met with, other enablers that facilitate trade and business? And I believe that in the past few years, it was difficult to have proper accounting systems for factoring companies, right? They used to use Excel sheets, etc., etc. And at some point, we wanted to start supporting back offices to provide back office support, but we changed dramatically because over the years, with the digitalization and development, technology advancement, we see that bespoke, customized softwares have been mushrooming, and now factoring companies have been able now to keep their books properly compared to, I would say, 6, 7 years ago when we were at the heart of the development of our strategy. So I believe that the missing link, right, is this information. And if you look at what we're trying to do, the repository, it's not, I wouldn't say it will provide all the solutions, but it is the beginning of something, right? If people start having this information, insurance company, you will see them start coming because the market is already there in most countries. And now factoring companies are coming up. Receivable financing has taken a greater role in the whole universe of trade finance on the continent compared to 4 or 5 years ago. So I just see an increased progression. Of course, there are challenges, there are obstacles, but with a growing population, young population growing, with the African continental free trade area, with a lot of money put on infrastructure to connect buyers and sellers, trade will flourish. And when trade flourishes, people want to take advantage of such opportunities. So, from where we sit, we see great growth in this section, in this sector.
Thank you, Enga. So, ladies and gentlemen, we're done with our questions, and I'm going to turn to your questions now. Actually, but just let me say one last word in compliment to the last question about the future. And I'm going to say this, having been, over the last 10 years, very involved with the support of Afro-Exim Bank and the development of factoring in Africa. 10 years ago, we had 10 members in FCI, 10 members. And today by the end of the year, we'll have 50. So it's a fivefold increase. 10 years ago, the volume in Africa was about 22 billion. And today that volume is I think 43 billion. So nearly double, about 7% growth every year, compounded over that 10-year period. That's about, I think, a little higher than the GDP of the continent over the last 10 years. But if you look at the history, globally, the average growth is around 2 to 2.5 times GDP. So the upside opportunity is phenomenal. And I am in Enga's camp. I'm an Afro optimist as well. I really fully believe that you're going to see an exponential growth in factoring, and as a result, and as an absolute necessity, in credit insurance as well. It has to happen. And I think that's the conclusion in my mind. And even though Menso, of course, he's on the ground, the reality on the ground, as is Wally, but I see too many positive things happening. So the need is going to be there, and then once the need is there, then the solutions will be fulfilled. So in your assessment,
I hope you're right.
Thank you, Mensa. I mean, fingers crossed. Okay, this is from Bert. In your assessment, how much can African enterprises save in its financing costs by using TCI? Maybe Menso or Wally, you guys can answer this question. Mensa, why don't you start?
Sorry, Peter, can you repeat the question, please? I'll find the question here.
So in your assessment, how much can African enterprises, so SMEs, corporates, save in its financing costs by using TCI?
Yeah, that's pretty straightforward to answer. If you're going to obtain bank funding, you're looking at, let's say, an average of 18% PA, so a monthly cost of 1.5%, where you're looking at average TCI funding on a monthly basis of less than a third of that, even a fraction of that. So you could be saving probably 1% if you take the excesses into account if a claim results. I mean, this is matchbox calcs, but roughly 1% a month if TCI starts taking over from traditional bank funding.
Thank you. Thank you. I think that's a great answer, and nothing needs to be said. And again, I just want to add, it's because of the fact that you combine factoring credit insurance and the controls that such process affords a financial institution to have that certainty of payment at the end of the day from the buyer. This is the magic of factoring, and I think this is again, it's the reason for the opportunity and lower costs of financing. Let me go to, I guess it's this guy, Shakilash Appa. And I think, Michael, you already answered the question a little bit regarding information, but what are the actions to be taken to decrease the information asymmetry? So how can we improve information? And we've addressed this a lot in this session. Any other final words on this? And anybody can take the question.
I think it's about getting that invoice repository up and running and being successful and along with the model laws. And I think if you combine the two, this problem starts to be an opportunity, not a problem.
Great, thank you. The next question is: how many big companies? Many big companies are investing in equity projects in Africa. What are the initiatives governments are taking to safeguard their investments? Maybe you can, I don't know who wants to take this, but maybe being Enga, because you're so close to the governments and looking at supporting the financing of trade in the continent. What are your views relating to what government actions are being taken to safeguard companies' investments?
There's so many, different investment regimes. Different countries have different regimes that are more pro or more investment friendly than it used to be a couple of years ago. The laws have become clearer. If you go to most countries now, you have special economic zones, you have financial hubs, and they have particular regimes where they are trying to lure investors. And also you have a lot of regional blocks, having all sorts of agreements in place in order to promote investment. So I think compared to many years ago, we begin to see clarity in terms of the investment laws, and we begin to see certainty in these laws, and we begin to see modernization of the courts, right? So these are some of the activities that African countries are taking. And even if you look at the AFCTFA, one of the reasons is that connect the countries where you will be able to, you'll be able to determine upfront, because one of the key things that investors want is, clarity to determine, for instance, how much taxes I will pay, maybe in Tanzania, in Kenya, in Uganda. When you start having harmonization of all of these rules, it makes things easier for the investors. So I think these are some of the actions being taken, and chief amongst which is the AFCTFA.
Yeah, thank you. That was actually the fourth question too. They had a question about the impact of the African Continental Free Trade Agreement. So thank you for taking that. I'm going to turn this last question, which is Mr. Shakalish's second part of his question, which is regarding the impact of. It was Manish. Highlighting what are the claims history in Africa and the recoveries. And I'm going to turn this question to Richard, because I think Richard has some data information that he can provide as the last speaker on this topic. So Richard, if you're there, please jump in. And if you're not, oh yes. Thank you, Richard. Go ahead, please.
Thank you for giving me all that notice, Peter. I don't have the statistics at hand, but if you look at the worldwide claim statistics, those in Africa are negligible. Where we see claims and where we see where our members are starting to scratch their heads, it is more on political risk, currency inconvertibility than anything else. I tend to be with Menzo, saying that the perceived risk seems to be a lot higher than the actual risk on the commercial side.
Yeah.
I hope that answers your question.
It does. And I have, of course, every year I see the claims history in Africa, and I do know that as a percentage of the credit insurance volume by region, it's the highest. So it has a higher propensity of loss, and that obviously enhances the illusion that the perception of risk is higher. But I think when you hear from someone like Menso or Wally, you hear what's actually happening on the ground and the deals that they're doing and the low risk that they're taking. So I think again, I completely agree with Menso at the end, at his final conclusion remarks, that if you're going to take this business seriously, whether it be factoring or credit insurance, you have to be on the ground. You have to have resources on the ground. You have to know what you're doing. You have to know who's in your backyard and know all the laws, the regulations, the logistics, all the things you said, Menso. So I thought it was a great final comment. So, ladies and gentlemen, I think we're at the end. We're actually 5 minutes over, so my apologies. But I want to thank you for letting us provide you some, let's say, glimpse into this concept of opportunities and challenges in Africa relating to credit insurance and factoring. And I'm going to turn it back to you, Richard. Thank you very much.
Thank you so much. And thank you, Peter, for moderating this panel and the speakers. You've overdrawn by 5 minutes. I think on this topic, you can talk for 3 days and it would still remain interesting. So thank you so much. Thank you also to the audience for your thought-provoking questions. And if I looked at the audience in the meantime, and we're going from Mauritius to Brazil, from Triglav Re to the World Bank, from FCIA to Clyde & Co. and Partner Re to Reuters. It is really a cross-section, and you have done a tremendous job in highlighting trade credit insurance in Sub-Saharan Africa and all the chances that there are there. And Peter, I'm in your camp as well. I'm an optimist. Now, to set that optimism, to put that in perspective of tomorrow. So the Trade Credit Insurance Week is exactly at half point. Tomorrow morning, we are going to showcase embracing sustainability in credit insurance. And I'm tremendously looking forward to this topic because it's products, it's how to integrate that into your corporate strategy, into your underwriting guidelines, what is happening on the ground. So I would love it if you join us at 10 CET tomorrow. That is 9 a.m. in London. It is unearthly early on the East Coast of the US, but our Asian members can watch this at their leisure. Tomorrow afternoon, we will talk about artificial intelligence in trade credit insurance. If you haven't registered for these, please do. You'll also be able to watch the recordings of the webinars. And on this recording, we hope to have it with you very early next week via our ICISA website. Please show it to your African skeptic colleagues, the ones who see the perceived risks as much higher as the actual risk, and let's get some trade credit insurance into Africa. With that, this is ICISA signing off from Schiphol Airport, and I hope to see you again soon. Thank you.
Great, thank
you,
you.
Richard. Thank
See
you.
you.
Bye.
Thank you.